Hey everybody, Jeff Sutherlin, eXp Realty. Wow, has it been a crazy 2025 in the area of real estate? Let me tell you. So today I'm going to actually give you a summary of what's going on and what I think is going to happen next year. So let's get right after it right now. All right, everybody, let's kick it off. Let's talk about mortgage rates. That's what everybody wants to know, right? In 2026, what's going to probably happen is rates will continue to slowly creep down. A lot of it depends on the political happenings, what happens with the federal treasury, but I do think that rates will continue to trickle down and wages will continue to try to creep up. That's what we need in the market. We need mortgage rates to go down and wages to go up. Don't expect real estate prices to go down. Don't expect it. Now, we'll probably see a little bit of decrease in the median sales price in the last month over Q4 of this year. That's because that typically happens at the end of the year, becomes a real good buyer's market. We see a lot of price reductions, a lot of concessions, but we've had very, very moderate appreciation, almost identical to last year in 2024. You're going to be very interested to see prices will probably not go down. By the way, whenever you have a 1% drop in payments, that's about 10% off your principal and interest payments. You can take a look at this chart and you can see what will happen when that rate hopefully does start to trickle down even more. Now, we're in the middle of December 2025. Look what happens to new contracts in the last few weeks of the year. Yes, it goes down quite a bit. So this is a buyer's market. I just put a buyer into a magnificent deal, got $30,000 off the sticker price, and on top of that, got concessions of $10,000. And on top of that, we're probably going to get more seller credits for repairs. It's an amazing time to buy a home, especially in the month of December. Sellers don't like being on the market in December. It's a good time to come in and do something as a buyer. You can see new contracts under 300,000, same story. It's going down. Okay, now as we continue to see this in the real estate market, look at the Dow Jones Industrial Average. Yeah, it just continually, steadily goes up because companies are still moving forward. But whether we're in inflation environments or difficult housing environments, the Dow Jones continues to perform well. So there's something that's interesting, especially for those that are in luxury purchases and they buy expensive homes. Many of those buyers are tied to the stock market. So this is an important metric to look at. New contracts between 1 million and 2 million, those typically go down. But if you notice in 2025, look at 2025 at that 18% increase over 2024. Okay, if you go back and you look at this in the under 300,000, 18% up. Why? Because interest rates came down a little bit. Affordability got a little bit better. So even though the market goes down in December, we are trending a little bit better than the last year. 16% over last year with new contracts over 2 million. Yeah, well, it makes sense. There's more homes that are over $1 million and $2 million than there's ever been. So yeah, you're going to see more transactional activity. Everything that under contract, we're talking over the entire Maricopa area, Maricopa County, Pinal County. We are 10% over the run rate of last year for total under contract at this time of the year. Everything under contract under 300 grand, 26% better than last year. We are starting to recover slowly in this market, a slow recovery across the board. 300K to 1 million, 1 million to 2 million, 22% over. As far as total under contract, we have everything under contract over 2 million at 4% over last year. So things are getting a little bit better. Now, check this out. Rental vacancy, now we're at 8.4%. This is in Maricopa County. It's definitely gone up. Well, that's typical because when affordability gets a little better, when people are offering amazing interest rates, especially builders, people are leaving rentals and they're trying to get into new homes. And because of that, you see more vacancy. And landlords might be thinking they can get a certain amount of money for it. They're holding the line, but renters want something less. And then oftentimes they leave the rental market to go into the housing market. Single family rentals still continue to be pretty much plodding along at the 2195 level, 2200 level regarding the average single family, the median lease actually price by quarter for new leases that are being written 2195. Okay. Rentals, a buck 30 per square foot is the monthly average lease price that we're seeing. And as you can see, it's pretty much consistent when you look at the last few years. Now let's look at the Cromford Market Index. This is our secret sauce in real estate. We know right now that we're in a slight buyer's market. Actually, not a slight, it's a pretty healthy buyer's market, 78.4. Remember, a balanced market is 100 on the Cromford Market Index. Right now, our supply is a little bit overbalanced, but for all practical purposes, you can say it's balanced at 105. Our demand is still lower at 82%. Okay. So, but we keep seeing the demand go a little bit higher as these rates continue to trickle down. Okay. Right now, a lot of uncertainty with what's going to happen at the federal treasury meeting in December. A lot will be determined at that point. Now, remember, the mortgage rates are not tied directly to the federal funds rate. It's tied to the 10-year treasury bond, but there is an indirect correlation between the federal treasury rate and the federal funds rate and the mortgage rate. There's many variables, so it's really important that you go see your lender to see what you can get. We are still in a buyer's market, a pretty healthy buyer's market, sitting around 78% or 78 against a 100 balanced market metric. Great time to buy. Great time to buy. Look at this. There's only been a few buyer's markets over the last 25 years. We're definitely in one now. And so if you're sitting on the sidelines, you need to go find out what your purchasing power is with your lender to determine if you can purchase a home. Chances are prices are not going to go down, but rates may and wages may go up. You can see the different cities in the sellers, balanced, and buyers markets, and you can see them. And wow, look at Anthem, number 2 in the metro area for being in a seller's market. From Hills tops the chain. Chandler 134. Those are the top 6 seller markets, balance markets, and buyers markets. Very, very interesting. So if you look at this right here, you can also see a pictorial of the different cities in the different markets. Now, this is what I'm talking about in terms of the median sales price not really changing. Look at this. It really hasn't changed that much since 2023. It's gone up a tad bit, maybe 3%, but this is about what's been happening. It's been very flat. So now we have opportunities to see rates hopefully continue to trickle down. If that happens, I'm definitely not going to forecast a price decrease, but slight moderate appreciation going into 2026. But home buyers are still being very picky, and they can be picky. They're coming in asking for concessions, price reductions, credits, you name it. It's all over the place, but they are asking for a lot right now. So much so, you can see that the number of price changes over a 4-week running total, we're talking about 12,000 in the area of 12,000 price reductions. Buyers are asking for a lot. Median days on market at contract. So when you put the listing on the market, you get a contract sitting around 44, 39, 44 days at days on market. The days are gone when you can just sell a house in the first weekend. Concessions of over 54%, or approximately 54% of homes are offering concessions in the transactions. Now, this is probably the most telling slide. Look at October 24 versus October 25. The average sales price per square foot, literally the same. Literally the same. Okay. And then we have the median sales price, 450, the same. Sales over asking price, practically the same. Sales percentage of concessions, the same. Isn't that crazy? The same. Seller concessions. It blows my mind how similar this market is to 2024. So let's just summarize it and put a bow on it. Next year, as we're going into 2026, there's a very good chance we may see rates continue to decline. Prices typically do not go down when rates go down. Prices typically go up. It'll probably go up very moderately. Now is the time to get qualified to get into a home because prices probably will not go down. Now, there's been a lot of talk about other things like the 50-year mortgage, which, by the way, I'll be on the record, not probably a great idea because you're going to pay just an immense amount of interest and your principal will go down very, very slowly. Sure, it might make your payment more affordable, but I don't think the better affordability is worth having something that you can practically never pay off. So I'm hoping we stick with the 30-year mortgage and we just adjust the rates and wages go up and we're back to a healthy housing market again. Let me know what you think. My name's Jeff Sutherlin, eXp Realty. Give us a call. We can help you out. 602-370-7174. I'll talk to you soon.